Today we are going to talk about Chapter 7, and Chapter 7 is about internal controls and cash. And the most important topic for Chapter 7 is bank reconciliation, and we are going to talk about bank reconciliation in detail. So what is bank reconciliation? As you know that every business has books that they maintain. These books keep track of all the transaction, and they also keep most of the cash in their bank. But at any given time, if they want to know what is actually the cash balance for this business, how much cash the business owns at any given time, we do bank reconciliation, a reconciliation between the books and the bank. So we have this information provided to us for Davidson Insurance. That's the name of the firm. And they have provided us all the cash they had received during the month and all the cash payments they have done using checks. Also, we have a balance that at the end of the month, December 31st, they have a balance of 17,450 and receive the following bank statement. So here is the bank statement. According to the bank, all the cash that came in and all the cash that has been deducted for various reasons from their bank, and the bank balance on December 31st is this $18,955. Okay, so let's see what else information do we have. Additional information that we have is that the EFT is electronic fund transfer, that either you received or you pay directly through the bank. It's very much like you have a checking account and you have set up your checking account to pay your cell phone bill $50 every month. So AT&T, for example, if you have AT&T as a carrier, they deduct $50 from your account. So that is the EFT. And the EFT debit was the insurance. So the one they received the rent and they paid insurance. Also, NSF, which is a non-sufficient funds. N means non as sufficient, and F for funds. So non-sufficient fund, or in common language we call hot check, or the check that bounced, means the customer gave you a check for a certain amount, and when you deposit it, the bank right away credited that money, and then when they send that check to collection from the customer's bank, the customer bank informed them that they are not enough fund to fulfill this 400 the check, and say that they send the check back, and that's how they deducted $400 back from your account. And the $1,400 bank collection was a note receivable, so you have some note receivable that you have collected through bank. The correct amount on check 1419 for rent expense is 1,930, and Davidson controller mistakenly record 1390. This is called transpose error. I believe it discussed in chapter number 1 when we switch numbers within that range. So we have to prepare a bank reconciliation for Davidson Insurance as of December 31st, 2024. And they gave us a hint that the district balance would be 18,025. So what we are doing here is telling us that the the books has a balance of 17,450. So according to the books, or according to the controller or the accountant, that the business has $17,450, and according to the bank they have 18,955. And the fact lies, how much cash they have is usually between these two numbers, and that's why they gave you the hint that the true value of the cash is 18,025. So we'll find out what does it mean. And in the explanation they tell you BC is the bank collection and EFT is electronic fund transfer. Electronic fund transfer I just explained. BC is the bank collection. The bank is collecting the cash on your behalf. And non-sufficient fund we just talked about, and SC is a service charge, the charges that bank charge you for providing the service. It could be any service. So what we're going to do, we're going to go grab a blank paper, and we're going to make two columns, one for the bank and one for the book. So balance we have to put as of December 31st. So what is the balance as of December 31st? For the bank is $18,955. And as a book, the balance is 17,450. So it's 17,450. Okay, now we need to find out if there is any deposit. So let's check. We have a deposit of 4,240. Let's see if we can find that deposit in the bank. So basically we have 4,240 and 4,240. That means this deposit has been cleared. The second deposit was $550 and $550. So that means this deposit has also been cleared. Means according to the book, you deposited in the bank and the bank has already taken into consideration. December 14, you have $600 deposit. That $600 deposit showed up in the bank. So we don't have to do anything. We can ignore these transactions. December 17, $1,900 deposit. And we have a $1,900 deposit. But on December 31st that you have deposit 1,860. According to the book, you have deposit, but bank has no record. So we have to add this on the bank side because bank does not know. So we call this deposit in transit. Means this deposit hasn't hit the bank yet. It will. So it will be $1,860. All right. Now we have to check the outstanding checks. First outstanding check is $810. Let's see, do we see over here? Yes. So we have $810 check that's been cleared. Second check, $1,470, $180. We can see that $180 check has been cleared. Then the third check is $630, and we see that this check has already been cleared from the bank. The fourth check is $1,390 that we have wrote, but it's actually $1,930, so that has already been corrected. But on this side, we can make a note that the book made an error. What is the error? They should have $1,930, but they have instead $1,390. So how much more they need to deduct? So if we take 1930 minus 1390, 540. So the difference is 540, and the book needs to deduct this $540, the difference between these two amounts. Okay, we'll check. We'll go to this in a little bit in a minute. Okay, and now you have noticed that we also have check 1420, 1421, and 1422, but you do not see these checks. So these three check has not hit the bank yet, means they are outstanding checks and will be deducted from the bank. So let's go on the bank side. So we have outstanding checks, and these checks are 1420, 1421, and 1422. 1420 is $1,490, and 1421 is $700, and this 1422 is $600. Okay, so this is the positive. These are the positive. These needs to be deducted, so they'll be subtracted. Sometimes people add these two numbers, so you can say that this is the cash you have. So 18,955 plus 1,860, $20,815. And if you deducted all these checks from here, the first one is 1490, second one is 700, and the third one is 600, and you left with 18,025. So this is the balance you have as of now. Now let's go on the book side. On the book side, what the bank is telling us that the book didn't know. So you notice one of the things that we have is bank has done EFT collection. So this is not mentioned over here. So we have to add this to the book side. So we're going to add EFT collection of $350. And we also notice that the bank has collected $1,400 for us. So we have to select this, the $1,400 that the bank has collected for us. So the bank collection, $1,400. So these are all positive numbers. So how much is the total we have? So we have 1417450 plus 350 plus 1400. So it's $19,200 we have here. Okay. Now this is the $540 that we need to subtract more because book needs to deduct this. So we call it correction of book error. So it's correction of book error that made by our employee was for 540. So we need to deduct that. Then we have a NSF check according to the bank, $400. So we have to NSF check of $400 we need to deduct. And we have a insurance payment, EFT payment of $225 that we made. So EFT insurance payment of $225. And we also have a service charge of $10. So we're going to subtract the service charge of $10. So when we deduct all this amount, so we have balance 19,200 minus 540 minus 400 minus 225 and minus $10. So we have 18,025. Now you notice both amounts are same. So neither we have 18,955 nor we have 17,450. The cash, the true cash as of December 31st, 2024 is $18,025. All right. So again, when we are doing a reconciliation, we always working for the book. We getting the information from the bank. So in this case, book does not know what bank knows, and the bank does not know what the book knows. For example, deposit in transit. The book knows about it, that they have deposited $1,860, but it's not showing up on the bank statement. So the bank does not know, so we have to add. These are the checks that we have written, but it hasn't hit the bank yet, so we have to deduct these to get it. EFT collection, because this money came directly to the bank first, so that's why we have to add it. This bank collection, because bank is collecting this money on our behalf, so bank knows first, so that's why we have to add this. So we are getting these two pieces of information from our bank statement. The correction of bank error, we realize that we wrote a check for 1930, but our employee recorded as 1390, $540 less. So we have to deduct $540 more dollars. This information is also coming from the bank. That's the customer check that you have deposited. It was not clear, so you have to deduct the $400. There is an insurance payment that the business make frequently or almost every month, $225. So it's an automatic payment. The bank knows first, and then you have to enter into service charges. Usually comes through the bank statement because the businesses does not know what kind of service charges they're going to have. So this is our bank reconciliation, and then I believe there is a second part to it. The second part is uh, we have to journal entry of all the information that we didn't know. So for example, this $350 that the bank has collected for us, we have to make the transaction. So what we're going to do, this is our bank reconciliation of Davidson Insurance as of December 31st, 2024. And we're going to make these. So we received this debit cash $350, and we're going to credit rent revenue for $350. And the second one we're going to do is to record rent revenue. And the second one is $1,400 that the bank has collected for us as a notes receivable to record the collection of note receivable. So we're going to say debit cash $1,400, and we're going to credit notes receivable for $1,400. The third one is the rent expense that we have paid the error message we made on our rent expense. So we're going to record error on check 1419. So debit rent expense, because this check was written for rent, so it's $540, and we're going to credit cash for $540. Okay. The next we're going to do, we have received $400 as a non-sufficient fund. So what we are going to do to record NSF check. So customer gave you the check, obviously customer owe you the money. So when customer owes you the money, it means it was an account receivable. So what we're going to do, we're going to debit account receivable, increasing the $400 balance of account receivable, and crediting cash, or reducing $400 cash for balance in this case. Okay. Then we also have to record insurance expense, because we have made a insurance payment. So record insurance payment, we're going to say debit insurance expense for $225, and we're going to credit cash $225. Then we have bank expense. So to record bank service charges, so we can say debit bank expense for $10, and we're going to credit cash for $10. So these are the things we have to do in order to balance our book. So the first part that we did it over here, it's a bank reconciliation. Based on these bank reconciliation, what book does not know, we entering this information in the book, so the book knows that this information exists. So every transaction has to go through your books. So please let me know if you have any question regarding bank reconciliation, and you can send me an email with your question, or you can contact me during my office hour Monday through Friday. I have provided you the information. We have an office hours in the afternoon. Okay, thank you for watching this video. I will hope to see you in the next video. Thank you.